Good afternoon, welcome to our midweek lunch wrap. Just a quick recap really on where things are in the middle of the week. And first of all, I want to talk about FX markets. They've been showing some signs of action at long last. It's been a bit dry for, well, really the last year. Volatility in FX has been pretty weak as central banks have come back in to the market and pumping more liquidity into the system, and that keeps FX volatility that bit lower. First up, dollar yen has pushed on up to its highest since last May, trading at 110.45 there at the moment. That is breaking out of the recent swing high from January by a good 20 pips, so up at its highest level, as I say, in almost a year. The next stage though is that May high, and that's at 110 spot sort of 70, around that area. That's going to need to be broken on the upside before we start to build out a picture of ongoing dollar strength against the yen. There seems to be a broad risk rally today following some weakness yesterday and at the start of the week on coronavirus fears, and then on Apple it's warning, but the market's coming back in. Stimulus is the key thing. Monetary policy expectations are driving the market at the moment, and that's why we're seeing these sort of moves. So dollar yen, as I say, pushing on up. There is some potential on the looking at the 4-hour chart, the 14-period RSI starting to show some divergence potentially. We need to see whether or not that plays out over the next hour or two, whether or not we get a fresh high above the previous high on the RSI. If it does, then that sort of RSI divergence is a lot less strong, and therefore there could be some further gains. But good signs really for the dollar yen. I'm broken that January high, and as I say, looking for 110.70, I think, where we would encounter some degree of resistance. The 50% retracement of the big move down from the sort of 2016 highs down to the lows that year. That move, the 50% move, is around 112, just north of 112. 112.65 to 112.70. That is that 50% retracement, and that's going to provide some significant resistance, you would think, too. Euro dollar is also off, down below 108. It's struggling again. It just seems to be a death by 1,000 cuts. We had weaker construction data out today, down 3.7% year over year in the Eurozone in December, and that is another factor weighing on the euro. There just seems to be no upside at the moment for the euro. It's just continuing to be pressured lower. Looking for 105, I think, really on the downside. There's not an awful lot of support down to that region. One spot 06 is a swing high that might offer some resistance or some support. But that is definitely looking still very weak. And at the moment, you've got to say it's trying to catch a falling knife if you're looking for the bottom on this one. I think you'd be looking for some more stability, like we've seen in the oil market. We've seen that basing, that sort of double bottom base around $50. That is constructive for the bulls. Suggests that the speculative longs that liquidated off the back of the coronavirus have sort of moved through the system, and those longs have liquidated, and we're now in a more sustainable sort of market position, and looking for I think probably signs that the coronavirus will have a less of an impact on oil demand in China. That may be wishful thinking. So this key thing is uncertainty in that market too. Elsewhere, cable has been it's been on a round trip, better than expected or higher than expected. Inflation data sent cable up to 130, one spot 303. Sorry, that was the session high, but since pulled back to below 130. Nothing really in those numbers. We've got more numbers tomorrow, but PMI data probably on Friday will be the key to see whether or not there's any material improvement for sterling. But then even that, we are looking really at the March GDP numbers as offering the first real insight into how the economy is picked up or not following the Conservative election victory. Those are the sort of key markets we're looking at. Also gold, it's obviously pushed on up towards $1,600, 1609 last time I looked, and it's threatening that spike at 1611, looking good for a highest close in the US market for some time, for 7 years in fact. That will be a key level to watch out for. So do we get that close in US trading above that level? I think as far as gold's concerned, we need to look at yields. Yields have retreated again as stimulus bets. It's also a bit of safe haven play with the coronavirus. Although equities are rallying on stimulus and ignoring the coronavirus, the hope of stimulus and risk-off flows from the coronavirus are very constructive for gold. Haven't been for the yen, but that's another matter. I think that's just about it for the moment in terms of our outlook. I think coming up today we've got the Fed meeting minutes. That's going to be key. Any signs of what they're doing with the repo market, reducing liquidity into the system. Also looking at Fed speakers today, Bostic, Mester, among others. I think there's 4 or 5 Fed speakers today, so that has potential to move the market. And then US PPI numbers will be out later, and that is a useful leading indicator for inflation in the US. Otherwise, that's it for now. Markets are trading a bit higher this morning, and we'll be looking for further strength into the US session. Tesla's up. It was up $70 the last time I looked, pre-market, off the back of an upgrade from Piper Jaffray. They've raised their price target to $928, which I think is a street high and indicates just how all the analysts, as we thought, are rushing to cover their backs and say that and raise their price targets, just simply to reflect the recent rally and the recent bump up in the stock. So that's it for the moment. We will be back later for a walk on Wall Street later on. Thanks for watching.